Palantir Technologies has just joined the big league. On Monday, September 23rd, the data analytics company was added to the prestigious S&P 500 index. Could this be a great buying opportunity? What impact will this have on Palantir's stock performance? And will the impressive 120% climb this year continue? Palantir is replacing American Airlines Group. This shift speaks volumes about the changing landscape of our economy and the growing influence of tech companies. Palantir is now rubbing shoulders with tech giants like Apple, Microsoft, and Nvidia in the S&P 500. It's a big deal. So what does it take for a company to join this elite index club? Well, as you can imagine, the S&P 500 doesn't just let anyone in. There are some strict criteria a company needs to meet. First up is market capitalization. A company needs at least $14.5 billion to be considered. Palantir, they're sitting pretty at about $83 billion as of September 2024. The market cap has grown by 147% over the past year. This massive increase in market cap isn't just a number on a screen. It represents real value creation and investors' confidence in the company's future. The stock needs to be actively traded, and Palantir definitely ticks that box. They also need to be US based, which Palantir is, with its headquarters in Denver, Colorado, and at least 10% of the company's shares need to be publicly available, which this company has got covered too. The company also needs to show 4 consecutive quarters of positive earnings. Palantir has been showing some impressive financial results lately, demonstrating both growth and potential profitability. The announcement that Palantir would join the S&P 500 came on September 9th, 2024. The market reaction was swift. The stock price gapped up about 8% and has since rallied by around 25%, setting new highs for 2024. But let's put this 25% climb into some context. Zoom out a bit and you'll see that Palantir has climbed an incredible 120% this year alone. It's also up about 530% from its all-time low in December 2022 and around 270% from its IPO price of $10. Pretty impressive numbers, so you can see why people are buying into the hype around Palantir. However, and this is important, it's still trading about 18% below its all-time high from January 2021. In fact, it had remained below $30 since February 2021, only breaking above that level in August of this year. Looking at the bigger picture, we can see that Palantir is actually trading inside a large consolidation and is trading back at the same levels from 3 years ago. So in reality, this stock hasn't really gone anywhere. Now, this might sound concerning, but it's not uncommon for stocks to stay in consolidation from their IPO price for lengthy periods before their first major uptrend. Take Tesla, for example. It consolidated for 3 years from 2010 to 2013 before its first major uptrend. Or look at Vistra, which took 6 years between 2017 and 2023. BWX Technologies, 5 years between July 2010 and August 2015. These examples show us that patience can be a virtue in the stock market. Sometimes it takes time for a company to find its footing, build its business model, and gain the trust of investors. During these consolidation periods, the company is often doing the hard work behind the scenes, improving its products, expanding its customer base, and refining its operations. Palantir has been trading inside this consolidation for almost 4 years now. But here's where things likely look rosy for Palantir. We're in the midst of an AI revolution, and Palantir is a prime beneficiary with its deep ties to the US government. This inclusion in the S&P 500 could be the catalyst for Palantir's first major uptrend. So what does the future hold for Palantir? Well, they've just announced a multi-million-dollar extension of their deal with APA Corporation, introducing new AI capabilities. This is certainly promising. It shows that Palantir is not resting on its laurels, but continuing to innovate and expand its offerings. These developments could open up new revenue streams and cement their position as a leader in the data analytics field. Now, the multi-million-dollar question: when is the right time to buy? The last 4 years have been challenging for Palantir's investors. Those who bought at the IPO in 2020 are only now back in profit. Investors who bought near the all-time high in 2021 are just now closing in on break even, and those lucky few who picked the bottom in 2022, they're sitting on a healthy profit. But as Palantir is still in consolidation, there's always the risk it could swing back to that all-time low. This illustrates the challenges of investing in a young stock with no proven history of performance. It's still maturing, still finding its footing in the market. The 25% rally since the S&P 500 inclusion announcement shows there's excitement around this stock. But remember, excitement is not a reason to invest. Hope, greed, and fear are emotions with a proven history of losing people money. What we need is a systematic approach, and this is where our 4-phase sequence method, or 4PS for short, comes in handy. Let's apply it to Palantir. Phase 1. Find a stock with a solid performance history. Although Palantir is relatively new, its recent success and inclusion in the S&P 500 indicate it's establishing a track record. As for trends, it hasn't developed a strong one since entering the stock market, with its movements being quite volatile. We prefer stocks like McKesson Corporation, ticker MCK, which shows smooth, linear, long-term trends. This doesn't mean Palantir can't develop such trends, but its history suggests it might be less likely. However, keep in mind that it has less history than many others in the index. Phase 2. Wait for a long consolidation or base to form. Palantir has been consolidating for almost 4 years, meeting this criterion well. Remember, the longer the consolidation period, the bigger the move when the breakout happens. Once this stock breaks out above its all-time high, it will likely get significant social media attention. The hype will build and everyone will jump on board, similar to what's happening with Nvidia. A systematic approach lets you take a position based on market structure and then ride the stock as the hype drives it higher. Phase 3, confirm the breakout from that base. This is where we need to be cautious. While Palantir has shown signs of breaking out, we haven't seen a definitive move yet. That definitive move is a break and close above its all-time high at $45 and even potentially $50 if we are to be confident that Palantir is in its first major uptrend. And finally, phase 4, enter the stock at the start of the next major uptrend. We might be nearing this phase, but it will only be confirmed if it moves above its current all-time high and follows a trend continuation pattern. To ensure it's not a false breakout where the stock falls back into consolidation, we need to see it move past the all-time high, then pull back or correct to retest support, and then finally push up again, breaking through the previous high. A pullback to support might cause the stock to move back into consolidation and remain there for months, which we want to avoid. Jumping in too soon could mean being stuck with the stock showing no growth for a long time. The risk taken on Palantir could be better allocated to stocks in a confirmed phase 4 trend and already moving upward. CBOE Global Markets and Fiserv are examples of such stocks in our portfolio, which I've previously discussed on this channel, and they have both continued to rise in phase 4 since I covered them. Now, based on Palantir's chart, with the stock above $30 for the first time since 2021 and the inclusion into the index, we're seeing aggressive buyers coming in now. However, the downside, as mentioned, is that Palantir can remain in consolidation with no growth. There is every chance that Palantir could swing back to those low prices below $30. To avoid this, conservative investors will likely wait for the all-time high to be cleared and potentially for the $50 round number to be surpassed. This would confirm that the first major uptrend has started before buying into Palantir. This approach aligns us with our 4PS method, ensuring we're entering at the start of a confirmed uptrend rather than in the middle of the current being added to the index hype. You may have heard investing is not about timing the market, it's about time in the market. I personally believe we have evolved from that. These expressions were the status quo once upon a time, but with the use of tech, we have evolved and we are just better investors. A more accurate statement is that we can now time the market to maximize time in the market. We now know how to apply patience and wait for the start of the uptrend and then hold and compound for as long as the uptrend is in play, which can often be for 12 to 18 plus months before we then exit and do the same on the next stock. This is the hallmark of a complete modern day stock market investor. So do your research, get a brief understanding of what the company does, look at the charts to get to grips with how the stock has and is performing and when you could potentially start buying, and then understand your risk tolerance once you are ready to start executing your strategy. Don't invest in FOMO or hype. Invest based on solid fundamentals and a clear understanding of your investment goals. Palantir's inclusion in the S&P 500 is undoubtedly a significant milestone. It validates the company's growth and potential. But as with any investment, it's crucial to approach it with a clear head and a solid strategy. The 4PS method I've just gone through can help guide your decision-making process, but always remember to adapt it to your personal financial situation and goals. Palantir is at an exciting juncture. Its inclusion in the S&P 500, coupled with its position in the booming AI and data analytics sector, make it a stock worth watching. However, its relatively short history as a public company and the challenges it has faced since its IPO remind us of the importance of caution and thorough analysis. Keep an eye on Palantir's financial reports, any new contracts or partnerships they announce, and most importantly, the stock's price action. Look for a clear breakout from its long-term consolidation and a sustained move above previous resistance levels. These could be the signs that Palantir is ready for its next big move. Another stock trading below its all-time high is PayPal. It saw 275% during the COVID-19 lockdown, but then dropped 85%. However, there might be early signs of a recovery taking place. Watch this video to see if the recent 40% rise has created buying opportunities and sparking a return back to its all-time high.